Good evening, members. I see Vipaksha Patpur on behalf of the Management Committee. Welcome you all for the study circle meeting on GST Invoice Management Systems, the effect of our action and recent judicial pronouncements and advanced impact on practice. Yeah. Before I go ahead, I would like to make an announcement. We have the state level conference on 29th and 30th of August. So kindly request you all to register for it and please circulate that within your friends and CA fraternity so that they also take the benefit out of it. Yeah? Yes. Members, I request the chairman, Manjunath Halur sir, to escort today's speaker, Mr. C. Akash Raghavan, and also request our Central Council member, C.A. Rajesh Sharma ji, Central Council member, please come on the dais. I request Central Council member to please hand over a floral bouquet to the speaker. They have amongst us the second speaker. I would request C.A. Javali sir, please come on the dais. So please hand over a bouquet to the second speaker. Members, I would like to introduce the first speaker on GST Invoice Management System, the effect of our action. C.A. Akash Srivatsan Raghavan. Akash Srivatsan Raghavan is a chartered accountant based in Bangalore with diverse qualifications and multifaceted professional journey. Akash completed his schooling in St. Joseph Boys High School and he holds a commerce degree from St. Joseph Commerce College, an autonomous body, and a law degree from Rajiv Gandhi College of Law, Bangalore. A qualified chartered accountant in 2012, Akash has also completed the company secretary course. He holds the certification from the Institute of Chartered Accountants of India in Power BI, Artificial Intelligence. His strong inclination towards technology is evident in his applications of tech-driven solutions in indirect taxation. Akash began his professional journey with his CA articleship at JCSS and Co. Chartered Accountants, Bangalore, where he specialized in audit and assurance. Post-qualification, he worked for about 5 years in Big Four audit firms in Bangalore and Chennai, gaining deep expertise in indirect taxation. Since 2018, Akash has been practicing independently and currently heads the indirect taxation. He is deeply engaged in advising startups and corporates on business strategy, compliances and litigation, especially in the areas of GST. His work includes handholding clients through scaling opportunities and navigating complex tax matters. Presently, Akash collaborates with the Legal Knowledge Group focused on developing litigation strategies and GST appeals. Akash is also a visiting faculty at prestigious institutions such as Institute of Company Secretaries of India and the Institute of Internal Auditors. Outside of his professional commitments, Akash is a qualified Carnatic and Western classical violinist. He is trained in violin and composition at A.R. Raghavan KM Music Conservatory in Chennai and is currently a part of Bangalore-based chamber orchestra that performs across India. A avid sports person, he enjoys cricket and table tennis, representing his residential community in tournaments. With this brief introduction, we welcome you, sir. I also have the privilege of introducing our second speaker on recent judicial pronouncements and advanced rulings impact on practice. CA Siddartha Javali. Siddartha Javali is a commerce and law graduate and a fellow member of the Institute of Chartered Accountants of India. He completed his articleship at Kamal Shah and Co., Bangalore, and a qualified chartered accountant in 2011. Post-qualification, he began his career with Big Four, where he worked in the indirect tax division, gaining substantial expertise in the field. Since 2013, he has been a partner at SS Javali and Associates, where he heads the indirect tax and project valuation verticals. He is well versed in handling matters related to GST, central excise, service tax, and VAT, and is recognized for his practical insights and technical proficiency in indirect taxation. Siddartha is currently serving as a joint secretary of the Karnataka State Chartered Accountants Association and is also an active member of Indirect Tax Committee of the Federation of Karnataka Chamber of Commerce and Industry. He has conducted numerous seminars and training sessions in GST and he is sought after speaker in this domain. With this brief introduction, so we welcome you all. Let's straight away jump into the technical session. Akash.
Hi friends. Good evening. Good evening. So, I am very humbled by the introduction. Just to give you a heads up, I gave such an elaborate introduction so that this led me to speak. I never knew that it will be spoken up here, and thank you very much, sir, because whatever be said and done, in the end, we are all students of law, right? We are all students of law and we have grades here, so we are still humbled and learning law the way it comes, the way it gets amended day by day. And today we have a topic where somehow I was called to talk because I was not an expert, because the system or the compliance, electronic compliance tool is not even come. So all of us are on the same page because IMS was introduced, all of us know, from September, October, right? But it's still not come out, and as much experience as all of you have, same do I have. Rather, we all have negative experience because it is from this month that GSTR 1 data is going to be through freezed output details. ITC related data from IMS is not even made mandatory till now. So that's the development GST is giving all of us, right? If we see, it's been 8 years and we are contemplating and assuming what may come up, and I thank ICAI for giving this opportunity on a topic generally just at, for example, or Commissioner of Appeals, advanced ruling, all these topics, there will be an expert talking. But here, there's someone who's as old as all of us here talking, only because the law is still not come, and whatever contemplation is going to happen, disclaimer, is based on details available in public record. I'm sure all of us are LinkedIn here. All of us LinkedIn or professionals. So that much data only I know. I've just tried to summarize that and present in 1.5 hours. So I hope I can do that so that it adds some value. So it's an e-compliance mechanism, right? So the first question that comes up is, IMS, should it be implemented only in GST? IMS is in GST in India. Should it be implemented only to GST? We take reference of other nations and we can say Not necessary. Because it's a business process re-engineering. Right? It's a business process re-engineering to automate reporting so that there is no VAT leakage. GST is interchangeably called VAT. In other systems it's called VAT. In India it's called GST. Right? So, another important aspects about IMS that's going to come is security, which is even there today. All the businesses we are filing, all of our clients, and even all of us, those who are practicing and holding a GSTN, forget about IMS, less than 5 crore or 500 crore. Is our turnover invoice-wise going on the portal? Is it going or not? Okay, this session will be an interactive one. Because as much as I have a duty for 1.5 hours to keep your dopamine levels up, and so should you help me also to keep my dopamine levels up, right? I know it's 5:30 and we all come out after a busy day, but the topic is such that it lifts me up because it has nothing to do with GST. Everything about technology, right? And none of us know, including me, don't know what is the law. 34 has been amended, 38 has been amended, that's all. And some advisories, Finance Act 2025, 24, some amendments have happened. But even those amendments have not been enforced yet. Therefore, the only way this 1.5 hours can be interesting is, I make it interesting for you and all of us make it interesting for each other. Right? With that, businesses, right? We are all consultants, right? Do businesses today need only tax consultants? Or tax consultants who are tech partners? Because a couple of months back, or rather probably 4 or 5 months back, we all did, most of us here might have done the AI level 1 course. Wonderful initiative by ICAI. Level 2 is coming up. Yeah, you won't believe, in amidst preparing for this, I have gone on the portal because LinkedIn I saw some couple of days back, it was launched I think in Delhi if I'm not wrong. I saw if I can go register for level 2 because we are today tech partners for businesses. We cannot say that we don't know how the portal works anymore. Yes, 2017 there was an option. Sir, Kannada is okay with all of us? Because certain things are ruchi Kannada bರುತ್ತೆ ಅಲ್ವಾ ಇಂಗ್ಲಿಷಲ್ಲಿ ಎಷ್ಟು ಹೇಳಿದ್ರು ಬರಲ್ಲ ಸೊ ಲಿಟಲ್ ಬಿಟ್ ಆಫ್ ಕನ್ನಡ ಹಿಯರ್ ಅಂಡ್ ದೇರ್ ಹಿಂದಿ ಐ ವಿಲ್ ನಾಟ್ ಟಚ್ ಬಿಕಾಸ್ ಐ ವಿಲ್ ಟಾಕ್ ಐ ಡೋಂಟ್ ನೋ ಇಫ್ ಯು ವಿಲ್ ಅಂಡರ್ಸ್ಟ್ಯಾಂಡ್ ನಾಟ್ ದಟ್ ಐ ಕೆನಾಟ್ ಟಾಕ್ ಸೊ ವಿಲ್ ಸ್ಟಿಕ್ ಟು ಕನ್ನಡ ದೇರ್ ಹಿಯರ್ ಅಂಡ್ ದೇರ್ ಹಿಂದಿ ನೆಸೆಸರಿ ಐ ಮೇ ಹ್ಯಾವ್ ಟು ಫೋರ್ಸ್ ಮೈ ಸೆಲ್ಫ್ ಟು ಗಿವ್ ದ ಕರೆಕ್ಟ್ punctuations and correct vocabulary, but excuse me on that. So today not only practicing chartered accountant staff has to be equipped, but we have to be business partners who are also tech, I call experts. And therefore the because when before going to level 1 course, all I did was go for 18 hours CPE. But after I finished it, CPE was just a number. The value add you get in level, all of them who have not attended level 1 course, my request is, please attend. Because the value you get in ICAI level 1 course, and I'm sure in level 2 course which I'm going to attend as soon as the portal opens up, is immense. Because it transforms you from being a tax consultant to a tech partner. Understood? Earlier, tax consultants used to have a IT partner if there's an issue with the portal. Today, we have AI, we don't even need a programmer. Chartered accountants, after I attended level 1 course, I went for FIP. Okay? Thinking I know everything about AI, technology. I go there, I see chartered accountants, brilliant. And all I did was 2 days spent over there in a hotel. Had food, came back. Because brilliant chartered accountants, the amount of technology, tech experts we are all becoming because of the training that's being provided to us is brilliant. Next to impossible. And that being said, let's come to a law. We have talked, we've spoken a little bit of here and there on technology. Let's come a bit to law. We all are aware, Constitution is the king of all laws, right? Right? Friends, Constitution, not a law professional. A citizen is required to know Constitution. Am I right? Constitution is the king of all laws. So then I said, I finished Constitution. I should know all laws because not only did I learn in my 12th standard, because I think somewhere few provisions of fundamental rights, fundamental rules are mandatory, but you come to CA, CS, LLB, every constitution is there. Then I took up one topic. It had nothing to do with constitution, Evidence Act. Evidence Act. Then I understood Evidence Act is even more difficult than Constitution. Somebody told Constitution is king of all laws. So if I know Constitution, all laws should become easy. Then I went into Evidence Act, totally upside down. So then I asked one of my mentors, what about Evidence Act? King of all litigation. Why is this relevant? IMS, what are we doing? What are we doing in IMS? Forget about the entire system, right? After we all file our returns, supplier, recipient, action, we all know what action is possible. Third one is default. What is the effect of our action? Section 53 of Evidence Act. Section 53 of BSA rather. The new Evidence Act. Not BSA cycles. Bharat. We all know. Okay. 53 of Evidence Act says admission removes the burden of proof on a taxpayer. Admission removes burden of proof. So whereas section 155, which talks about burden of proof on taxpayers in the CGST Act, section 150 of CGST tax says that burden of proof is on department, correct? Burden of proof is on department except when it comes to eligibility of ITC. Am I right? Am I right? Right. But can department say 2A, 3B not matching? 2B, 3B not matching? Demand. Is that possible? Section 106 of Evidence Act. Section 106 of Evidence Act clearly says where a law requires a burden of proof to be on a particular party, whether appellant or respondent, that person has to prove the burden. So ITC is what IMS is for, right? So burden of proof on ITC is on, friends, interaction please. Burden of proof on ITC is on only on eligibility. But there are several case laws starting from constitutional 1950 which says that there have been Supreme Court judgments which clearly say just because the law says burden of proof is on a particular person, right? It does not take away the right or duty of the other person to establish a prima facie case. Are we all together on this? If I am going slightly fast, I don't mind going a little bit deeper into the subject on Evidence Act because not GST. Section 106 of BSA, that's New Evidence Act, says that where the law says one particular person, generally it is not person who alleges. If I say X has stolen my property, the burden of proof is on me. But when it comes to ITC, it goes to not 104, 106. 104 says person who alleges has to establish burden of proof. In 106 it says if law says it is not the person who alleges, it is another party. So automatically it becomes taxpayers. Taxpayers means consultants because we only file the returns. But several Supreme Court judgments which clearly says just because burden of proof by law is on a particular person does not take away the duty on the person who alleges wrong availment of ITC to blindly say the burden on that person. Because prima facie case has to be proved by one who is alleging. Right? Coming from Supreme Court cases. But 53 of BSA is an exception to 106 ka prima facie. See how deep it is going inside. 53 says where a fact is admitted, you don't have to prove it. I am taking an action in IMS. I am admitting this credit note, invoice is eligible for me, ineligible for me, credit note not available, available. We are doing everything on the portal. So how is 155 going to change now? Because 34 and 38 has been amended to Finance Act 2025, yet to be notified. Am I right? Budget we all saw. But 155 is yet to be. So will there be an impact in the upcoming GST Council meeting? is something we all have to wait for, because that I feel, personal opinion, that is a mandate, because the burden of proof. What kind of system does India follow in evidence? Anybody? Why am I, when I say Evidence Act is the mother of all litigation, what kind of system does India follow? Inquisition system, adversarial system. I'm going to interpretation of statutes, which we learned in, I think, inter or maybe even before that. Yagon chapter 50th class, so that will be mostly out of our syllabus for studying. But in an adversarial system, what happens? Husband, wife file divorce petition. Who has to go prove that who made the mistake? Husband and wife. In an inquisitional system, there will be a jury who has to prove a fact. In our system, person who is filing petition and the respondent has to prove a fact, for the judge will only go through the facts. We all have seen several case laws in high courts coming this side as well as that side, correct? Especially in GST, because Gestat is still not functional. How is it possible? Because the judge will not do justice. The judge has to only see the proportion of weight of evidence submitted by both the parties, because we are in a adversarial system. Had it been an inquisitional system of evidence, judge and the jury has the duty to go find out who's the correct person among the two, whether husband did the mistake or wife did the mistake, before judgment is passed by the judge. Right? We were all seen in Hollywood movies, etc. Because in India, I don't think any of the movies talk about inquisitional system, but all the Bollywood movies, most of them follow the inquisitional mode, because wherever British rule was not there, inquisitional mode was there. So that being said, let's slightly warm up on GST before we go into IMS, because I see some of them coming in. So what I've done to my presentation is, I've kept first few slides, basics, because I understand that we will not have only GST experts here, neither am I a GST expert, so they would have getting to know each other, getting to know a law a little bit, and then we'll get into IMS, right? History of where GST came in: 1940, central excise, state excise. Then came sales tax, right? Then came consolidation in 1970s of customs law. Then in 1980s there was a VAT system which was proposed under central excise. Why am I insisting on VAT? Because IMS will not be possible if there is no VAT system. Hence we are going through this battle. Because there is a lot of maturity to come to IMS today. Right? Then came service tax, initially positive list, then negative list, because of which SENVAT credit rules came in 2024. Then all the states started taking up VAT regime, right? Around 2000, 2005, Gujarat, started with Gujarat, Tamil Nadu, Karnataka also 2005. Then came GST. No, the effect of that in VAT. Initially it was called manufacturing VAT, right? Manufacturing VAT. Then it was introduced 1996 as more VAT. Then it became SENVAT, right? SENVAT in 2000, SENVAT credit rules 2004, right? Then state VAT. Then sales tax, state sales tax become state VAT. CST was still outside, 2% because no credit. Am I right? All of us same page? Now, what did federal GST bring in? Because state was anyway following a VAT regime, central was following VAT regime, but interstate supply, interstate sale, no CST credit. Therefore, federal GST has to be brought in. Are you understanding how beautifully the maturity of entire VAT system in India happened from VAT today to GST and next IMS? Totally origin-based tax to destination-based consumption tax, right? I think this juncture we have to pause and appreciate our government for this, because that's a great leap to take into IMS, because countries like Costa Rica, Malaysia, right, that have very less population, that have mature business environment have not even brought it after India has brought. Recently Malaysia has brought, UAE has brought. India brought it 2020, I'll tell you how. We'll just talk about GST for some time to understand how the entire VAT system will work now in GST. I think this question all of us can participate because nothing to do with IMS or GST. In import and export of goods and services, liable to? Sorry, goods. Import and export of goods, liable to?
Customs.
Very good. Import and export of service. Import and export of service. Huh? GST. Service tax gone. Repealed. 1994 Act. Finance Act 1994 Chapter 5 repealed. GST. Import export of goods. Customs. Import export of services. GST. Domestic supply of goods and services. Supply means supply of goods. Sorry, can you repeat that? Goods and service. Okay. How many of them feel supply of goods and services is covered under GST? Please raise your hands, please. Supply of goods and services covered in GST. Good. Raise up, please. Higher. Higher. So others, what do you feel? Goods or services. How many feel goods or services? Higher, please. Both are correct. The point which we all miss is the word both after good or services. So I am a faculty at ICSI, so I said some student raised their hand, CS final student, indirect taxes syllabus. They said, sir, goods and services, goods or services, what's difference? I said, huge difference. Right? Goods or services is either goods or either services. Goods and services means? Can you please be louder? Hey, correct, both. But what is, see, as a patient I can say both. But as a doctor, what should I say? Works contract. Schedule 2 says works contract is a service. But Schedule 2 can only say it's a service if it is covered under levy. Schedule 2 is linked to section 7, which is nothing but definition of supply, which is a levy section, which is connected to 265 of Constitution of India. Levy section? Levy section. 9. 9 is levy. Which came first, levy or supply? Supply comes first. How many of them say supply comes first? Please raise your hands. Higher please. How many of them feel levy came first? Nobody, except me. Madam there.
I took for supply only.
Okay. Levy, how many people? Sir, how do you say levy came first?
You can levy, the service is defined and you can levy, if there is a service or a
Goods.
physically say.
Round of applause to sir. 30th June 2017, there was sale of goods. There was supply of goods. Supply was not defined. Supply was defined, but was it notified? 11:55 p.m. Let us assume this book is sold. 11:55 p.m. 30th June 2017. Supply is there. Levy is there. Levy is there. 11:55 p.m. 30th June. First, sorry.
30th June 2017, it is not a supply as per GST. Sir.
Exactly. So there has to be a levy first. Levy started when? 12 a.m. 1st July 2017. This book was purchased by me 2 days back because I am coming here. When did supply happen? Supply was defined on 1st July. Section 7 was, rather if you see the model GST Act, supply was in section 2. Anybody gone to the model GST Act? Definition of supply is there in GST Act. But when did supply of this book happen for me? day first day. So after levy came in, what if I supply this before levy? Can there be levy of GST? No, it will be central excise and state VAT if you interstate CST. Am I right?
Yeah.
So which comes first? So 9, why levy is important than today it's supply. Tomorrow it can be only manufacture. Day after tomorrow it can be only service. Supply is a definition. Instead of 2 it is in 7. Generally we all know definitions are section 2. It is just that it is the topmost priority definition in GST supply, so they put it 7 and it's larger, right, compared to other definitions. But tomorrow supply can be removed, still levy will be there because 9.1 says today supply of goods or services are both. So if it is not supply of goods or services or both, it is not import of services. 246, read with schedule 7, list 1, 2, 3. What is it? Union list, state list, concurrent list, whichever tax. Am I right? So there's one more student who asked me when I was taking indirect tax classes. Sir, 246A came in 101st Constitution Amendment. Am I right? 246A, 269A, 279A, 366, Subrule 29A. These 4 amendments, major amendments made in 101st Amendment of Constitution 2016. Am I right? Sir, why did they struggle so much? Why couldn't they put in 246, read with schedule 7, list 3, concurrent list? In concurrent both can levy tax, center and state. Why they didn't put? Anybody?
If it is put there, then both will, they can frame their own rules.
Even now that's what's happening, no?
But it is-
Each center has its own law.
But GST Council has to give the.
But GST comes at 279A, nothing to do 246A. Why?
You don't get taxation powers in the concurrent list.
Sir?
You don't get taxation powers in the concurrent list. You
Of course,
only-
sir, both get.
No, you will never get. You will only, recent 9 days went to the Supreme Court clearly said, in the concurrent list there are no taxation entries at all. It is only the regular or the general entries. You can only legislate. Taxation never comes to the concurrent list. The list 1 or list 2.
One reason, but bigger reason was Article 254. Article 254 says, in case of special circumstances, so 101st Amendment could have changed that also. But that is a very important reason. But the bigger reason is, Article 254, 252 says, in case of emergency, who gets the powers? Central government. In case of non-equivocal law made by center and state, which will precede? Center law. So state said from 2016 GST is trying to be implemented in India. We all know that. It was successful in 2016. For 16 years, states were not happy with 246 because they will lose the power in emergency. They said, whatever be situation, I want power 50%. You levy IGST, you levy CGST, let center collect the tax. I am not worried. 50% emergency situation also, war happened few months back, still state will get power to levy tax. Right? Another reason is what sir told. Tax laws is either in list 1 or list 2. But that could have been amended, but
254
Yes.
has to be invoked. It has to be read with entry 97 of list 1.
absolutely,
They go together.
absolutely.
If you don't find anything in list 2, okay, only then entry 97 will be invoked.
Yes, which was service tax scheme.
Yeah, the service tax, gift tax.
Yes,
so
yes,
many-
yes.
there's so many taxes are there.
Yes.
Now, what reason you are giving, I don't think that will suit for GST. GST, that's the reason they brought in 246A. There's
Correct.
nothing like 1, 2 and 3 now.
Absolutely, that's what I'm trying to
Like
say.
list 1, list 2 and list 3.
Absolutely.
It's only 246A.
Absolutely.
Read with other amendments, that is all, nothing beyond.
Absolutely, absolutely. Absolutely. So 246A, make sure that center and state hold equal power, whether it's interstate or interstate. Interstate covers import and export as well, right? Okay. That being said, if something is not in 246A, customs, right? 246, customs come at 246. There are also taxes that are still existing even after GST, right? Those taxes will be the taxable levy an event for transactions that do not qualify as supply nor import. Import, IGST is applicable on import and export, but that is section 5.1 proviso says IGST is leviable, but not under, it's not called customs duty, duties of customs, because customs tariff act levies the IGST on import and export. 99% of imports, 1% of export, because of WTO regulations that export of goods and services should be done on our taxes. So therefore, goods import and export is under customs tariff act, not GST. Though it is IGST, the rate etc. provisions are taken from GST. Now let's come to ITC in Indian GST. Dual levy, we don't stop there. Dual administration, dual credit. Am I right? Not only levy, credit, administration, policy formation, council, we come to council, there's a provision for that. Generally, GST is a complete self-assessment mechanism. Are we all on the same page? Section 59 says, tax has to be self-assessed in the, sorry?
Return.
No, reported in the return. Tax has to be self-assessed in the, sorry? Tax invoice. If you see Rule 46, 47, 48 of CGST Act, it gives a format of self-assessment order. In VAT, sir, 1340 NICA, 1450 NICA, because the concept of reassessment was there, which is still there in customs on a risk basis, right? Self-assessment is there in bill of entries, but if a proper officer under customs feels that the self-assessment has some issues, he can do reassessment. But GST, is there reassessment? Please come. Is there reassessment in GST? Only special circumstances, right? It is complete self-assessment. So the VAT order we used to get year on year is now invoice on invoice under Rule 46. Format is prescribed. There is only tools on risk basis to identify the short payment of tax. If that materializes, demand, recovery, revision, appeal, rectification, there are provisions. But reassessment, therefore, tax officer is called assessing officer. No, proper officer. He has to be proper. What is proper officer? Why not just officer? Why not just tax officer? Proper because he has to be jurisdiction officer. And taxpayers are called assessee under GST? Tax registered persons or taxpayers, because he is not succumb to reassessment unless there is a vested assessment. All provisions from section 60 to section 64 are all special circumstances. Return not filed, registration not taken, possibility of him running away from India, right? Generally, self-assessment is the basis. Then you have e-automation of transaction-wise details filing in the e-invoice. And finally, refund of the ITC or output tax rebate system or of deemed exports. Invariably, what is difference between exempt supply and zero rated supply? Both zero rate output tax, right? What is the only difference between exempt supply and zero rated supply? ITC. It is just government is giving us a route to use ITC and pay via rebate, or for penalty made Form I in CST, you all know? Form I? Friends, CST Form I, penalty made sale, interstate is not leviable to CST, right? Same thing in GST, 0.1% merchant exporter, you within the same state, where there was in manufacture also a concept. So, ITC either can be availed on B2B basis by the recipient or by exporter or deemed exporter, penalty made exporter claimed as refund. Mind you, all the deemed export concepts in GST is nothing but penalty made export concept which has been refined. right? If you see and intrigue into each of the provisions, it is penultimate transaction to export. Is deemed export under GST and deemed export under FTP the same thing? Both deemed export concept is there? Not the same. Okay, not the same. We will not get into it because that's not the point of discussion. Why I am bringing up refund here? There is no topic of discussion. From May 2025, refund will be given. Don't you think that has some relevance with your IMS coming in from September, October? Right? We'll come to that. We have discussion on that. Now, before we delve into IMS, take a single transaction in everybody's mind. One transaction which will be leviable to GST. 246A says center and state has equal power to levy GST, right? If it's interstate, collected by center, distributed to states, right? Okay. 269A is IGST a tax? Anybody? IGST is a tax? IGST is almost biggest number of transactions because most of it are interstate, right? Is IGST a tax? Still around 40 minutes is there for tea. So we can interact with each other and is IGST a tax, friends? Yes? How many of us say yes? Please raise your hands. IGST is a tax. Please, please. Others all? Around 6 people. Others feel it's not a tax? Tax, not a tax, IGST. Tax. Unanimously tax? Technically not a tax. IGST, CGST, where does it go? Sorry? Again, doctor level answer, not patient. Where does CGST go? Constitution of India. CGST goes to Consolidated Fund of India. SGST? IGST? There is a levy, there is a taxable event, there is collection, there is demand, but technically to be a tax, it has to go directly into Consolidated Fund of India and Consolidated Fund of State. Here it is going, no doubt about it. But is it going as IGST? No. How many of us know that after we file our 3B on 20th, department files something called STL forms? Right? Anybody aware? STL return. No, we will not know because department files it. All states and center and union territories have to file it. The purpose of STL form, up to my analysis, is mainly for IGST. That is why section 49 read with 49A and 49B says ITC of IGST can be used for everything.
Yes.
Output of IGST can be used by set off of credit of everything. So they all want everything to go to that central kitty on top, file that STL forms and then distribute. So technically, this is not my opinion, it is there in GST background material mentioned by ICI. Technically, IGST is not a tax. It's a revenue distribution mechanism. Mainly to circumvent the negative effects of central sales tax. Right? So 269A. 279A, Council. Group of all finance ministers, secretaries, etc. So, just for a joke, one of my students asked me, "Sir, why finance minister? Why not chief ministers and prime minister?" So the other student replied, "Sumnero, you know what? In my house, if I want bike, I'll ask my father. What father will say? College times, not no. Of course, we all buy our own bikes and cars. What father will say? Sorry?
Go and ask Chief Minister.
No, you shall not buy. Then what you will do? Fret about it the entire night. Next day, go to mother. Will father say no to mother? No. just for law, finance minister is expert in the law. And therefore, the nod of finance ministers of all center and state will hardly be rejected by the primary minister of the state and the center. And they are expert in their own fields in the finance segment. Therefore, all finance minister, because just imagine, pre-GST regime, it was an origin-based tax. And if a state was good at textile will be lesser VAT rate. Why? So lesser manufacturing or VAT rate. Why? Because I manufacture more of textile, cotton let's say, I want to sell it more, right? But in GST can they do it? Everywhere, recommendation, it's called recommendation, but recommendation of the GST Council. Therefore, Council ensures the uniformity of law in CSI, UT and compensation cess. Right? Therefore, 279 was very much needed to ensure the federal system, which was taken from best practices of nations like Canada, which is again a federal system. Right? We already discussed. What comes first? Levy. Levy is there. Then you have taxable and supply. I brought this book. The seller, let's take for example the shop Pulyani and Pulyani. Okay? They have sold this book to me. So, once there is an attraction of levy on a supply, this time it is books, it can be anything, whatever is in your mind. What happens next? After levy comes supply. After supply, once supply has happened, what has to happen next month? Same day. Invoice has to be done, assessment has to be done. Once assessment is done and invoice, what has to happen? Sorry? Payment, don't worry, it will happen. Reporting has to happen. Payment will happen or not happen, interest is 18%. Almost 3 times of bank rate. Don't worry about payment. Payment should happen, of course. But reporting has to happen, more importantly. Right? But if you have more than 5 crores, inception level reporting in, we'll come back to that. Self-assessment. If there's a question of law at self-assessment, where do we go? Next topic, advanced ruling. There's a question of law which I am not able to judge when I am doing self-assessment. Where do we go? Advanced ruling. Question of fact which is doubtful today. Where do I go? Sorry?
Court.
Sorry?
Court.
No. Officer. Provisional assessment. Yes, it is not used as much in customs as it will be in GST, but in construction industry, if there is a question of fact which I am doubtful about, I will have to first go to department officer, get a provisional assessment done, pay, and then pay the balance increase. We all know what is provisional assessment, I'm not getting there too much in there. Once assessment is done, reporting happens. What happens? Notice, sorry, audit, scrutiny, search, seizure, summons. This is not notice. This is a tool to identify the risk of department losing tax. Am I right? It is a tool. Department can choose a tool based on evidence on hand and the seriousness of the evidence on hand. After this comes 73, 74, 74A, depending upon whether department's evidence is sufficient enough. Now we talk about 265. What does 265 say? Article 265 of Constitution of India. No tax can be recovered unless authority of law. But suddenly I have got 300A. What is the relevance? 300A is a mirror of 265A. When department cannot recover anything under authority of law, you don't have to pay anything unless there is authority of law. Am I right? Property was under fundamental rights. It was moved out of fundamental rights and moved 300A. Is bank your property? Bank your property? Your taxes are paying for the bank every month or year or quarterly, right? 300A says it's a mirror of 265. 265 says department or parliament cannot take anything into consideration of India or states unless there is a law. For us, there is not a protection for us. That is a duty of administration and legislature. The protection for us 300A. Therefore, we heard of natural justice, Audialtrum Partem, Nemo, right? The natural justice is because under 300A, if your bank account is being taken as tax, there is a need to give you an opportunity to represent. Though it is coming under Article 14, 19, 21, it's a triangle, all that is okay. But end of the day, my property is being taken, so I need to give you opportunity to say why I should not give it to you. If it is not self-assessed. If it is not self-assessed. If it's self-assessed, that has to be paid. That is why section 76 does not have time limit. 74A has today. 73, 74. 76, I have self-assessed that I have to pay this tax and I have not paid to government. No time limit. Straight recovery after notice. Right? Some cases. B2B VAT flow. Invoice, GST self-assessed. Right? Then you report in 1 or 1A now. Change in 1A or amend in next GSTR 1. Then ITC, conditional asset. How many of us feel ITC is a vested right? Because there's the Supreme Court judgment on this. We are not just talking in ICA. Supreme Court judgment still awaiting on this aspect. I think few high courts have already given their opinion on this. ITC, is it a vested right or be issue? We'll come back to that. 2B, matching and flow today. No IMS today. Mandatory. Because if it's not mandatory, why you want to take action and admit something, right? 3B, availment or re-availment under Rule 37, 37A, and then refund in eligible cases. Inverted duty, export, deemed export, credit note. Credit note. Why credit note has come into IMS? Anybody? Why 34 has to be amended? Not only 38. 34 has to be amended because credit note is only for 4 reasons. And those 4 reasons, if I qualify, automatic refund. Credit note is nothing but RFD. Without filing RFD1, I get refund. Am I right? Does it look somewhat similar? It is just that it goes through my returns, refund. So, when e-invoice is applicable for B2B and export, why not credit note? Because that's also a refund, right? Credit note is not applicable because it's VAT. It is coming under the VAT chain. It is coming because it's a form of refund. We'll get into that next. ITC. Legal right. Vested right. We had this question whether ITC is a vested right. Divergent views. Based on several authors' reading, ITC is a legal right vests upon conditions under Chapter 5 of CGST, SGST Act and Rules. Conditions may be pre or post. 41.1 was amended with 37A to say 16.2C and 16.2A has to be mandatory, right? But I can take the credit, it's not more provisional. I have to reverse it so long as I don't have to reverse it so long as tax is paid by supplier. But if he pays later, after November of the financial year, I can re-avail it. Am I right? So it's a final asset. All conditions under 16, 17, 18, 19, 20, 21. 22 onwards go to registration. 16 to 21 conditions satisfied, vested right. It is not vested right ab initio, is my view. It is up for challenge because still there is no conclusive evidence on that. So, input tax credit is a feature of VAT mechanism. Therefore, IMS first discussion is brought by a GST model. Vendor payment check. The third one seems to be a very, very simple statement, right? But 16.2C and 16.2AA is a condition under the chapter 5, ITC. If I decide not to take ITC, do I have to worry if the supplier has paid the tax to government? But unfortunately, yes. Because there was an amendment in August 2022 which says eligible, not eligible, reversible, personal, please take all ITC from 2B, then reverse it. Is there amendment in August 2022? Right? Therefore, whether I am availing the credit or not, so long as it comes in 2B as eligible, it is my duty to make sure vendor has paid. But before August 2022, I don't have to check if the vendor has paid unless I am availing, because the condition for checking is under 16(2)(a), only if I am availing ITC. Is there chances where I don't want to avail ITC? Possible? B2C, one example, no ITC. B2B, exempt supply, no ITC. Correct? Am I right? But after August 2022, where law has made it mandatory to avail ITC so long as coming in 2B, that leeway, that advantage for taxpayer is gone, because everything I have taken and then reverse. Final ITC is self-assessed, right? In the returns, yes, I am doing self-assessment of ITC also in the returns after it hits electronic credit ledger. Am I right? Even if I am eligible for ITC, if it doesn't hit the ECRL before 30th November of subsequent financial year, am I eligible for ITC? There's a limitation. So it has to hit the ECRL. GST is what kind of a tax? Destination based consumption tax. GST means output tax, no? Which are you talking about? ISD makes input tax a destination based tax. So that is the importance of ISD. From 1st of April it's mandatory, right? Diversion due to litigation is mandatory or not, but from a compliance point of view, it's mandatory. At least from a legal point of view, ab initio. ISD enforces nothing but destination based principle in ITC, not output tax. Destination based consumption tax is for output. ISD makes sure ITC is also destination based. Right? Goods and service tax also. Today there is no auto check for invoice and credit note. Right? Okay. Now we'll get into IMS. Till now no IMS. Just a warm up. Now we'll get into IMS. Why IMS? Is GSTR 1 and 2B a return? Return? No. It's a statement. Only 3B is a return, 9 is a return, 9C is also statement. Therefore, we are all availing credit. It may be okay for us because we are in the positive side. What about department? There is no ab initio check before flowing into my returns, right? First, ab initio is necessary because there will be mistakes by supplier as well as recipient. There needs to be some action in between. Right at the time of filing e-invoice, it sits in my IMS. What is IMS? Anybody? What is IMS? Before we get into detail, what is IMS? Sorry? No, not full form. What is IMS? It is an electronic ledger. Items in IMS has been said not to flow into 2B or 3B. Am I right? LinkedIn has all the FAQs, all the finance bill amendments, act amendments, has all the advisories. If something is not flowing into return and statement, it is ledger. If it's in your books, it is books ledger. If it's in online, electronic ledger, same as cash ledger. When you pay amount in cash ledger, leave aside Madras High Court judgment. Amount in cash ledger, have you paid government? It's a wallet. But Madras High Court has a different view. It has its own reason in section 49. But if you see from ab initio analysis of deposit in electronic credit ledger, cash ledger, only interest is saved. Tax is still not paid, right? There has to be a recovery in DRC 7 or DRC 8 for it to hit the government portal. Am I right? So, that being said, the hit to government is very important. As we already discussed, from August 20, there is a change in the ITC availment mechanism. Therefore, all credits used to flow. So, the risk of department that we will not reverse something after availment, because everything should be availed. That is at the planning of assessment stage. At the operation, VAT gap. This is an international term called VAT gap. Anybody, what is VAT gap? What is VAT gap? All of us either get profits or salary. Based on that, you determine expense. Your studies in 12th standard. Government, how does it do? Reverse. First expense, according to determine the rate of tax, etc. Am I right? If government, since government does it inverse, if income is not achieved, let's say to GST budget, then there's a VAT gap. Right? It can happen either by invoice or by debit note and credit note. Right? So that has to be kept on check for credit notes because it's an automatic refund. Track and trace for ITC reversal. Presently everything flows into 2B, 2B flows into 3B, and taxpayer gets auto-generated notices. If that auto-generated notices can be circumvented, we all know how to do it, then department has a huge risk. What is VIDA? It's again an international term. VAT in digital age. It is a concept of what is going to come, which we are going to discuss from the next slide, which is the actual surprise for all of us, right? CACWA certification now is available for ITC and credit notes. It is not a long-term solution, is another reason which I feel why IMS may be needed. 16(2)C has been declared in Suncraft, Energy, Kerala High Court judgments as too harsh because there is no procedure to implement it. Till November, where November you may get a mail or a portal is enabled recently to give the notices where GSTR 1 is filed by vendor but GSTR 3B is not filed, tax is not paid. But still, how authentic it is because 3B is a lump sum, 1 is an invoice wise transaction. If 1 and 3B has 100 rupees difference, 3B being lesser of the vendor, how do you know which transaction, which vendor has not been paid? Will you go all the vendors and say 100 rupees you cannot take? Not possible. IMS is needed. Finally, there is a limitation for availing ITC. And department has limitation under 73, 3 years, 74, 4 years, under 74A, slightly adjusted. Statutory developments. Since IMS has come, since all of us are almost in LinkedIn, I am not going through this. I know this is the main, most of us are expecting this to be the main part of discussion, but it's part of LinkedIn, so I am not going in, but we will delve into each of the aspects as we go ahead, right? Now let's get into real IMS. E-invoicing.
Sir, if you don't mind, if you go to the tax slide, even though it is not on LinkedIn, it is 19625 handling the inadvertently rejected records. What is it?
196.
196/2020. How to?
If a record is there is a recent advisory issued by GST portal which says if something has been inadvertently rejected. See, in IMS there can be 2 actions.
Accept, reject, and
No. IMS there are 2 actions. 2. Accept and reject. No, reject and pending. Because if you leave it as it is, it's accept only, no? Automatic accept. So why do you want to do something that will become automatically after you file 3B or other 2B? IMS. So only 2 actions IMS is needed for. Other one is a option. Reject or keep it pending. If I reject, I don't get that. If I keep it pending, it flows into next tax period's ledger. Right? So what if I have, you asked gentlemen, you asked what the answer to your question is, there was a doubt in the presently IMS has been released optional. What if something has been in the optional facility rejected inadvertently, then I lose credit. So department came with the clarification for supplier to again upload it in 1A before 3B is filed, in next one after 3B is filed, etc. etc. There are several FAQs based on initiate. You can go through it, it's a public domain. E-invoicing. Topic of discussion today. E-invoicing. Costa Rica introduced IMS along with e-invoicing. Right? If e-invoicing is not possible, majority of IMS may not be possible. Majority of invoice-wise refund may not be possible. Take service tax returns ST3 for example. Is IMS and invoice-wise refund possible? Possible? Not possible. Because you used to give, from books you used to take sales data, from books purchase data, report it, no electronic ledger also, and file report or revise it. Right? GST facilitated electronic ledgers. Am I right? But transaction-wise details used to be reported in one. What is the authenticity of one? It's a statement, not even a return. Am I right? So e-invoice, where self-assessment happens in invoice. Why not return? Why not e-validation of return with hashtag of IRP? Why e-invoice? Because invoice is the assessment order in GST. At source level for large taxpayers, invoice is authenticated. How many of us know that for 5 crore plus taxpayers B2B transactions, you don't even have to put the authorized signature on the invoice, and single copy is enough. This is all coming out in Rule 46, 47, 48, so I'm not delving too much into it. E-invoice, stage 2, can be said to be IMS. Okay, we come to that. It's a rule-based workflow, e-invoice. Firstly for assessment. I have done self-assessment, I send it to IRP. He puts the GST, sends it back to me, one copy goes to recipient. I affix the QR code or the number, IRN, and send my invoice. Am I right? That's what we're doing now? Okay. ITC, IMS. Where does the data flow into 2B before I file my one? We all read the FAQs. It says data flows into IMS even before I file my return. What is it happening? Before file not return statement of outward supply. Is it happening? Where is it happening from? E-invoice or e-way bill. E-way bill is picking up from e-invoice. Then where is it happening? E-invoice. Okay. Refunds. If the entire VAT regime is not having an e-invoice, what is the validity of refund? Today, all of us who are filing refunds are filing 2A, 2B copy. What are we doing? Indirectly, by filing 2A, 2B reconciliation to a refund officer, what are we doing? We are letting them reassess our self-assessment of ITC. Am I right? But after invoice-wise refund, is it necessary? We'll keep that for the subsequent discussion. The e-invoice which is filed initially goes to IRP for hash. Then there's action by government ab initio. Then there's an action by recipient in IMS. Then there's action by the exporter or deemed exporter when you're filing your refund application. Right? Straight away flows. Don't have to auto locking of fields which are introduced from July 2025. And IMS table 3 July 2025, table 4 which is ITC will come up very shortly. Right? E-invoicing facilitates that. E-invoicing, should it come under GST? First question we discussed about IMS. When I say IMS, it is e-invoicing phase 2. Because that's how other countries have implemented it. Does it have to come in GST only? GST law only? Not necessary. It can come through income tax law. There's a country. Belgium. Belgium has introduced e-invoicing through VAT and income tax. Why all countries prefer to implement e-invoicing through VAT or GST is because of the flow. Because that's a VAT regime. You can flow the e-invoice. ITC can be restricted because one of the conditions is that whether vendor has paid the tax. It facilitates that also. But it is nothing to do with tax. It is a business process change in the nation. E-invoice, which facilitates automatic refund, which facilitates automatic flow to the recipient, which facilitates authentication ab initio even before returns are filed, which also facilitates banks to generate FIRCs without even filing a return. So entire ecosystem, e-invoice facilitates. And now we are in the third stage. How? We will see. Documents covered under e-invoice in India: invoice, debit note, credit note. Am I right? So IMS is applicable for invoice, debit note, credit note. somewhere it is looking like IMS is a phase 2 of e-invoice. We'll just reiterate on those aspects. E-invoice is applicable to whom? B2B? Exports. Automatic, why export? Why B2B? ITC. Why exports? Refund. Why credit notes? Automatic refund. Right. Next slide, you will get more insights on how e-invoice is applicable to B2C also. We'll come to that. There are machine readable formats, QR code, where 4 things are authenticated. Invoice number should not be repeated, so invoice number. In the same financial year, so invoice date. Am I right? Majority HSN codes, majority value HSN codes. And your GSTN of both the parties, because the action of e-invoice should go to supplier and recipient. Am I right? So if you see e-invoice, or rather IMS, it's already enabled 2020 October. It is just that the system in a country like India is coming in now, which has to be appreciated, because the population of India is such that you cannot bring it in one go. It has to come in 3 stages. How 3 I will explain you. Now, 5 crore limit on e-invoice. Today we had discussion in our office. Taxpayer has achieved 5 crore turnover on 30th of June. From when should he raise the e-invoice? Sorry?
Next year. First of
Next invoice.
Okay, so all of us same page. A in our office said 1st of April 2025. B said, correct, you're right, I'll tell you. There's a confusion on this. But there is a clarity in 2020 where it was a financial year was amended to previous financial year. So why that? Whereas for 22, section 22 on registration, if you cross 20 lakhs or 40 lakhs or 10 lakhs, immediately to next invoice I have to. Why that leeway? Because e-invoice is only compliance, number 1. Number 2, self-assessment can be done immediately on next invoice. Whereas implementation of IMS or e-invoice, we all have done for our clients who are above 5 crore. PO1, PO2, PO3, they will call us for meeting. Whose scope of work is best? Then they will start bargaining there. A, B, C. Sir, you, chartered accountant, says one is best because scope of work in the agreement is best for one, but he is costly. So we have to make 2 agree to scope of work of 1. So you know how difficult? It needs that much time. It needs that whole financial year when I reached 5 crore till 31st of March of that financial year. Therefore, it is not immediately implemented. And that's why I answered this slide. That being said, all of us know what is the concept of big data here? Big data? Data that is big? No. Big data is a quantum computing methodology in information technology that facilitates non-RBDMS. Sir, we didn't attend AI level 1. RBDMS. Relational Database Management System. How is it relevant for IMS? If big data, let's imagine we were in 2005. With the computers in 2005, can you implement IMS? Big data computing, quantum computing, qubits computing is needed, which is what the technology is presently across the world. Right? So it's very important to understand, as I said, there are technology partners who are also tax consultants, not vice versa. Right? Number 1. Number 2, analytics, data analytics. Invoice-wise details going to department. Section 158A. What does it say? Anybody? Section 158 of CGST Act says that where data is reported by taxpayer, government takes up responsibility to make sure that the data is not leaked, which we discussed in the initial discussion. Therefore, e-invoice, which is bought in other countries about 20 years back, around 80 countries have bought an e-invoice, whereas India is one of them, but has quickly gone to stage 2, stage 3. What is stage 2, stage 3? I'll come to that. Next, we will see what are the variants of e-invoice. There is nothing to do with both the variants applicable on IMS. Variant 2, IMS not applicable. QR code, dynamic QR code. Why is dynamic QR code required? Anybody? See here. E-invoice are of two types. One is e-INV format, which is for assessment. Basically, IRP signs the document, right, and gives it to me. I put my invoice and send it to the recipient in the invoice. Rule 48.4 and 48.5 of CGST rule says, if QR code or IRN is not there, the invoice is invalid. When invoice becomes invalid, ITC becomes invalid. That is how e-invoice is important for large taxpayers. Now if you see dynamic QR code, who generates the QR code? Supplier. It is only to facilitate electronic payment. Digital payment initiative of UN has been implemented here. So e-invoice in GST are of two types. One is INV1 and dynamic QR code. Let's not worry about dynamic QR code because both are mutually exclusive. B2B exports and credit note covered under e-invoice, e-INV format. Whereas dynamic QR code is applicable only to B2C. So it is mutually exclusive. Don't have to worry about the right side. But why I am saying this is when client asks, is that e-invoice also related to IMS? Not at all. Right? This is the shift which we are seeing in the ITC mechanism. There's clarity in May 2018 with clarification given by CBIC saying that so long as ITC is available in books of accounts, no need comparison for with 2A for first 2 years. All of us are put in litigation, SC and reply appeal. Okay. First 2 years, books. October 2019, 2A was implemented. So 2A was only comparison. Then what came in? Amendment? 2B. No. Not 2B. Before 1st January 2022, another amendment made to Rule 48.4, e-invoice. After 2020 October, 1.5 years has to be checked how the e-invoice system in India is working. Then came 2B, which is the first complete stage of e-invoicing in India. Clear? Second stage, October 2024, IMS was optional. Can be made mandatory anytime soon. We're just waiting for GST Council recommendation. Just to make some more ancillary changes. E-invoice 3. When did it come? May 2025. When refund also was invoice wise. So currently we are at the third stage and almost the final stage because we are waiting for IMS to be mandatory. Right? Almost in the final stage and that has to be appreciated to the government. Substantive changes, we all know 36.4 was the first brought in October 2019. Then 48 was amended to bring e-invoice. Then 16.2 AA was brought in to give effect to 36.4. Then 41.1 was amended. What was section 41.1 amendment? Sorry? Provisional to final ITC, which facilitated Rule 37A. And finally 34 and 38 have been proposed for amendment. Not yet amended. Not yet amended. 34 and 38 on e-invoice is not yet amended. It is enacted. Finance Act 2025 is enacted, not notified. Procedural changes, there was something called taxpayer communication. Anybody is aware of that? Taxpayer communication, not IMS. Taxpayer communication. All of them who file GST returns for any of your clients, please log in. There is something called taxpayer communication, which is the first thing that came in 2020. Then came amendment of 3B, August 22. Then came amendment of 2B. All this has paving way for IMS. Amendment of 2B 2024. Then 1A had, then dual view of IMS in October 24. Then 1A was introduced. So that wrong entry doesn't, there's opportunity to change after 1 is filed before 3B. So that because recipient gets to know about transaction immediately after e-invoice is filed, right? So there needs to be in the interim between 11th to 20th, or rather even before that when assessment happens, if at all any change is identified to recipient and communicated back, because IMS has two views, supplier view, recipient view. We all know recipient view, accept, reject, pending. But supplier view is even more important, because to file 1A, if 3B is filed in next one, communicate back to the communication, taxpayer communication method, or amend in next one. Supplier view is even more important than recipient view. Now proposed IMS system, goods, services of both are supplied, supply arises, self-assessment happens in invoice, reported for large taxpayers on IMS e-invoice system. For small taxpayers, below 5 crore, how does it go into the GST system? Reports, GSTR1, GSTR3B. Then recipient accepts, rejects, keeps pending. Credit note as well as invoice. It's a ledger as we discussed. IMS will then be freezing the 3B values. Presently it is not, because table 4 has not been made auto freezing, because IMS is not mandatory. Once IMS becomes mandatory, July 2025, table 3 freezes. After the council amendment tentatively, table 4 will also freeze, because e-invoice is facilitating all these things. And finally, ITC or output tax for supplier gets auto-populated in the respective returns, right? Proposed system. As I said, supplier view update in one, same one, because from the time of 11, let's assume I raise an invoice on 1st of July. When should I file one? 11th of August. But the day I raise invoice, it goes in my IMS. So till 11th, communication can happen. The point 4. So update in one can happen. If one is filed, 1A can be filed till 3B. If that is also filed, next month's GSTR1. If recipient can also be wrong, you're talking about lakhs of registrations. Always supplier is not wrong. Recipient, so there we can communication channel, which was enabled. Recipient, we are not getting into, because all of us know about it. It's all there in all the FAQs. And e-invoice is a batch chain flow for buyer to have a chance before availment of ITC to take any action. As I discussed, it's a ledger. Why? It is pending items are out of 2B and out of 3B. So what it can be? E-ledger, something like electronic cash ledger. If you see the first GST Council meeting, where IMS, I think 37, if I'm not wrong, IMS finds place along with other ledgers. Right? It gives government clean statistics of ITC. E-invoice gives clean statistics of sales. IMS, after action, clean statistics of ITC available by recipient in the VAT mechanism. So e-invoice not only facilitates output clarity, but input clarity also after IMS comes in. And it facilitates auto-filling and locking of fields in the returns. Right? GSTR 1A changes in GSTR 1A is to 1. It comes in same IMS, goes to next month's 2B. Not same 2B. Please be mindful, please be careful. Anything amended, changed in GSTR 1, you can only change of that GSTR 1 in 1A. Right? Those who have used all GSTR 1A, you can make changes in 1A only of that GSTR 1, not previous GSTR 1. But IMS impact is in same month. Action same month. But going into 2B of very important aspect. 16.4 limitation is not invoice wise. See, there is a Supreme Court, rather High Court ruling which says, I'm not sure, Telangana if I'm not wrong, which says 16.4 will be applicable once all conditions of 16.2 is fulfilled, right? But once after IMS comes, automatically is going to 4D. Problem. QRMP taxpayers, quarterly basis, but that is for their inward receipts. Outward receipts, IFF also is facilitated in IMS. So they get done on month-on-month basis. Whatever is reported in IFF should not come in GSTR 1. Very good. resetting of 2B is permitted so long as 3B is not filed. What if I file belatedly 3B? Yet to see. Pending record in an IMS goes to next IMS unless it is barred under 16.4. Okay? Supplier saving record in GSTR1, IMS gives in a view format. These are all something written in FAQs as such. Sequential filing of 2B, 3B and 1. No pending action for credit note rise, debit note invoice decrease. Similarly, supplier's liability is increased for same transactions. Right? These all come in the FAQs and the advisories, so I'm not delving much deeper into it because there's one more slide after this, after which we'll be done. No IMS goes directly to GSTR 3B. What cases? ISD, ITC, block credits, RCM, import of goods, and ITC forms. ITC forms are when? Merger, composition to regular taxpayer, unregistered to regular taxpayer, ITC 1, ITC 2. So I'm not getting deeper into that. Amended record to be considered only original record considered except the credit note. Till September, no IMS. Only from October 24, IMS will be valid. Non-34, section 34 changes. Please amend only in 1 or next 1 or current 1A, not via credit note. Finally, if it's a POS issue or invoice is beyond November, irrespective of conditions fulfilled in section 16 subsection 2, automatically it will go to 4D. Now the only question comes here is 4B, 5, GSTR 3B. Today what we are availing? 4B5. No, 4B5.
4B1 and B2, sir. 4A5.
Okay, we'll come to that question because that is the next slide. Important aspect discussed here, burden of, see, where the recipient does not pay the recipient pays the supplier the tax, okay? Recipient pays supplier the tax, but supplier does not pay to government. Problem will not come in IMS, but not coming in IMS is a proof to take remedy under civil law. We all knew when GST was implemented, we asked all the clients to amend their contracts, saying if I pay supplier, supplier does not pay to government. If supplier does not pay to government, make sure recover the amount, right? But unfortunately, department comes on the recipient because 16.2C and 16.2AA permits that. Am I right? But what is the other remedy I have if I have recovered under 16.2C? All I can do is to go for contractual remedy, and IMS action or not appearing in IMS is a proof by itself on this aspect. There is no global SOP on e-invoice till now. These are some of the pros and cons that e-invoice. Now for department, there are two burdens. To maximize revenue, because expense has to be somehow recovered. Another burden for department is to make sure the risk of non-payment by taxpayers is managed. So these are the reasons why department wants to implement IMS immediately, right? Some of them, best practices, provisional ITC made final, audit trail to mention of actions, and cost and inquiry. These overweigh the other minor aspects per se. Some of the best practices achieved through IMS, full e-invoice system, right? Facilitates full e-invoice system after IMS. Auto flow of details into reports. Need not have to type like how we do service tax or even now in 3D. Edit instead of revise return. There is no concept of revision of return under GST. You can only edit fields, even in 1A. It's only editing the fields. Auto updating liability in the reports. It automatically flows. Fairness to all stakeholders. Natural justice is for court in a legal system. Fairness is same as natural justice in a non-judicial manner. Finally, there is a public opinion in IMS. It is released on the portal. There is a public opinion for almost 6 months now before it is enforced per se. Last slide is on what is still not implemented. If IMS gives wrong data, wrong action, who has to be punished? Section 122 penal implications, talks only in a non-IMS scenario. In an IMS scenario, who will be penalized for what action is yet to come out? 53A of BSA says something is admitted, burden of proof need not have to go on. But 155 still says burden of proof is on the recipient. Table 4B5, someone was talking about 4A, right? Table 4B5, today I am availing ITC of everything in 2B. Someone who said that, please can you raise your hand, sir? 4B5, I am availing everything from 2B, right? Plus reavailment, 37A. But after IMS comes and 4B5 gets auto-locked, how will I reavail? Are you getting the question? Once 4B5 is B2B plus reavailment. After IMS is implemented, there will be auto-locking of table 4 also. Which 4? 4B5. Then how do I put reavailment? So ideal scenario has to be 4B6 table has to be introduced. Ideally 3B has to be amended. I know this is slightly, we are not having returns here, but you all can go back to your offices and check what is 4B5, 4B6, how reavailment can be done, etc. 88C and D, auto-generated notices. DRC, 1C and 1D. Will it be even needed after auto-logging of fields? These are questions still to be asked, but still the provisions are available. Refund, after it has been made invoice-wise. Stage 3 of e-invoice. Refund invoice-wise. ARN on GST portal. Will it be invoice-wise or refund-wise? We have personally not filed any refund after May. If anybody has filed, can give you a views. But till a view comes in, I am assuming that it will be invoice-wise, because if the refund is rejected, one refund invoice rejected, everything gets rejected. Everything goes to RFD2, RFD6, RFD8 route, right? That may not happen. So if anybody has any experience on this, can come up. Change in 1A or where 2B is filed belatedly, 3B is filed belatedly, can I file 1A and take IMS, reset IMS till 3B is filed? There is a recent clarification couple of days back by GST portal which clearly says so long as 3B is not filed, 1A can be filed. So that clarity is there, but no practical experience till now, at least from my side. If anybody has tried filing GST or 1A after 20th, inputs are appreciated. IMS still not implemented. So can I take action of IMS? 3B not filed. Can I keep resetting the IMS till 3B is filed? Because next one cannot be filed. Sequential filing of reports. These are the open-ended questions now. If anybody has answered, do write to sir. Sir will forward it to me. If I find an answer, I will write it to sir. Sir will forward to the last report. Right? That's the closure of discussion on e-invoice. It was titled IMS, but IMS is nothing but e-invoice. Phase 2, going into phase 3, which is refund will be given now invoice-wise. Thank you very much to sir and all of dignitaries there for giving this opportunity. I hope all of us got some value on this. Thank you very much.
Thank you, Mr. Siddartha. Thank you, Akash. I call upon Chairman to please hand over a memento to the Speaker. Members, let's have a round of applause. Members, there is an announcement. At Art of Living, there is a program going on for chartered accountants. So on 25th, 26th, 27th, residential thing. President is supposed to come. I don't know how far it has been confirmed, but anyway, you can just register for it. Okay? Yeah, come.
So good evening. We are conducting a breath and happiness program. It's called the happiness program. So basically even Narendra Modi practices it daily. So how many of you feel you don't have time in your life? Or you think you don't have time for 3 days? It is from tomorrow till Sunday evening and it's a residential program. So basically what we teach over here is how do you handle your stress, how do you handle your work and how do you manage your time. So if anybody interested, you can register. I'll be outside. You can reach out to me. If you have any queries, you can ask. Yeah, thank you.
Members, now we'll go for the snacks. Yeah? Yeah, we'll just rejoin within 10 minutes. if possible.
Good evening, everyone. Good evening. I hope everyone has had their cup of tea or coffee. And since it's the second session, I hope I will not be able to bore you more from the judicial pronouncements which I've got over here. So once again, I would like to say I'm Siddartha Javali, and I would like to thank ICAI of Bangalore branch for providing me an opportunity to come here and give a lecture on the GST subject matter. So, without much delay, I think we have already been delayed by almost 15 minutes, and I'm supposed to end the session by 8 o'clock. After that, I'll be taking up the question answers, if any. This is my agenda for the day. First one, I'll be just giving a small overview of the GST case laws in India. And my way of interaction, lecture will be more of an interactive session where I prefer to have actually get the answers from you first, and then I will be answering you about the matters. So we all know that we have got a lot of, when we handle some cases, what do we do first? Anyone? Apart from the regular GST practitioners. What do we do when we are when we get a case from our clients? Understand the facts, then
Refer the relevant provisions.
refer the relevant provisions. Right. After that,
look into the judgments, previous judgments.
you directly go into judgments, or after looking at the provisions, what it should?
There is a difference of opinion, then only we will refer to judgments.
We'll see the
Difference of
actual
opinion. Sorry?
We'll see the actual problem.
Actual, sorry?
Problems.
Problems. So what I would say one step between the two is the fact that we try to interpret the law which we have learned across for last 8 years in GST, or if someone has been practicing in VAT and service tax era also. So these laws also will come to our help right now, right? So first we see the provisions of the law, rules, any circulars, any notifications, etc. Right? Am I right or wrong? All of us do the same thing? Right. So first we understand the problems of the client, then we interpret the case with the knowledge which we have from the law and the rules and other documentary requirements from the government side. This is what we do. First we do interpretation. Then we go on to check whether our interpretation is in line with the judgments or not. We try to find out the judgments which are in line with our thoughts, or we find the judgments which are in line with the provisions. What do we do? We normally, as a human nature, we try to find out the case laws which are in line with our thought process. So we are trying to help the client in getting the case laws which will help them, rather than helping them understand what the law is. Am I right? Majority of us do the same thing. right? So that is where we come across as a chartered accountants. Now, in the process, which in the whole session, I'll be saying something which may or may not be, appreciated by most of you. But one thing which I have come across in the last 14 years of my experience is that we chartered accountants always think in one manner, agree or disagree. But when I see the lawyers who have been practicing in the last many years, they think totally in a different manner. How many of you agree with this? Okay. So what is the major difference between what we think and what they think? Any idea? Anyone from your experiences? Sirs?
I think it's the way they read a particular provision, because we would tend to read, I've seen even my students, they tend to read a line in a whole, whereas a lawyer would break it up into parts and then try to analyze their...
Absolutely. So that is one way of thinking. Anyone else? Anyone else has got their own experiences? Yes.
We look at facts, they look at laws.
Perfect. So that is what even Sir said, and you also. They are actually breaking the laws. That is what you are saying. So this is something which I have also understood, that we are as a chartered accountants. Apart from this, what we are trying to do is to, as I said, we are trying to find the case laws which will suit our client's requirement. We are trying to appease the client in the first place, right? Other hand, the lawyers are more brilliant and smarter in understanding the law properly and then applying to the case, right? They apply the law, they don't apply the case laws. We are doing the other way around. We are applying the case laws to the law. So I think that is something which we need to change ourselves. I think it's better for us. I don't say it is done by all of us. Some of us may be doing something better than what lawyers do. It will be helpful for all of us to understand what you do differently than what a normal CA does. Can anyone say anything, examples, what you do differently than what other CA does? Because this is judicial, let it be open. And if you are open to share the secrets, what would you do? Anyone?
First we see the validity of the notice.
Validity of the notice.
Preliminary objections. Majority of the time we don't take the preliminary objection. We directly go into the pits of the merits.
Right.
Merits of the case. So on the other way around, we have to see under which section they have issued, whether if the jurisdiction is there, the proper officer is can issue a notice on me, whether under section 61 can he ask for the documents or only the scrutiny. So
Correct.
these are the things which we made.
Anyone else? I'll come back to that point. Thank you. Anyone else? Anyone does say something different from what others do? So what she's trying to say is that what we have learned in last 8 years. This is thanks to a few of our mentors. And if it's okay to take their names, I would say that for me, mentor has been Jatin sir and Rajesh Kumar sir. In most of the cases where I have been, in last 8-9 years where I have been stuck in certain cases, I have always gone to these people and they have always helped me. And I am really thankful to them for teaching me how to read the case laws. Now coming back to the point which he said that any case which we get, the first thing I see is across is whether the notice which has been issued to the client is valid or not. That is where it starts from. Once I confirm it is valid, I will give you as a simple example. Section 67, majority of the cases, how many of your clients have got Section 70 notices directly? Section 70 means summons. Summons, the GST Enforcement of Karnataka State GST Department, Commercial Tax Department, issues a summons.
Because with regard to the expatriate cases,
Expatriate cases.
So direct summons.
Direct summons. Do you think it's correct, sir?
Logically not correct, but difficult to challenge.
It is not difficult to challenge.
But again, need to go to higher authorities. Again, they say go back to the officer.
Does not matter. So this is where we have to think, like differently from the regular thought process. Yes, most of us reply to the summons. Reply to the summons is nothing. It's something which is not heard about in the law, right? So this is a simple example which I am trying to give, that a summons, as simple as a summons issued by the officer. Even the officer himself does not know the law. if he issues a summons directly. A summons cannot be issued directly to any in the GST Act. It has to be coming under Section 67 only, and that too as an additional support system for 67 data to collect the data for the details which he has already got in Section 67, that is inspection time or search time, right? So, but we all answer these summons provisions immediately. So, I have actually challenged majority of the times a summons. Tomorrow I have got a hearing for a show cause notice issued against not attending a summons for questioning why. I questioned the officer, why are you issuing a summons? Please let me know what is the document you want. He says, give me all the documents. I said, no, I cannot give you all the documents. You tell me what under 67 you have to give. Have you done any 67? Which client you want? Which vendor you want? So he has issued a show cause notice which is not in the form DRC1. So this is actually a win for us. Right? This is a simple example I am trying to give as to what we should have done and what we should not do. Right? Now coming to the judicial interpretation. These are the simple things which I was being explaining last 10 minutes. Now coming to a few cases which I have come across to collect in last 24 hours. These cases are more of Karnataka based case laws, which will be actually helpful for the people in the city. Because when we go to the department, they say that is it a Karnataka case law? Correct? It's as simple as that. For them, it is Karnataka case law or a Supreme Court case law. 90% of the time, most of the officers do not accept either of the case law. They don't even accept the circulars. Am I right? They don't even accept the notification. They say, this is my interpretation. Nonetheless, it will be helpful for us over the long run to understand how we can handle certain case laws, which are collected. The first one is the Bundle Technologies case law. How many of you know who is Bundle Technologies? Swiggy, right? So this was case law related to the investigation, Section 67. People, as usual, inspection has enforcement has gone. DGG or the VAT GST enforcement people. They have asked the Bundle Technologies to pay the taxes without any data. They have just ad hoc payment has happened. Now, what did Bundle Technology do? They went for a refund of this tax paid. They said that we are paying under protest and we are not agreeing to the fact which you have said, but then because you have come and you have asked us to pay, we are paying. Naturally, everyone of us does this. So even about 6 years back also, one of my client, he was also forced to pay. I said, we can help you out. Please let me know what you want me to do. He did not come back. He said he is better off handling the case. And today he has been made to given a demand order of in crores, thanks to that one wrong decision which he took. Right? This is what happens when you don't apply, when the client does not trust you. And today has come back. I am asking higher fees now. Thank you. So, coming back to this bundle case, the High Court of Karnataka has ruled that the taxes paid during the inspection can be refunded if there was no case made out of it. So here, for the inspection, whatever happened, further there was no case which went on. So they applied for the refund within the 2 years time limit. Yes, Section 54 is still applicable here, and we still have to go within the time limit of 2 years from the date of payment of tax for the refund. So if any of your clients has got a 67 notice inspection or a search and seizure where the officer has forced to pay the payment of tax, please advise them that you can go for refund. This is a Karnataka High Court case law which is easier for them to get through. Next case, this is for the anticipated bail case. Right? Majority of the times the officers threaten to give a arrest warrant. But do you all know that these officers cannot give a direct arrest warrant? How many of you know it? Any idea? Any other idea whether GST Act can alone ask the officers to go and arrest the officer or arrest the assistant or you as a anyone? No idea or no? Answer is no.
No idea.
No idea. How many of you say no? Okay. So correct. I mean, like the arrest warrant, whichever happens under section 70 or any other, I think it is section 70 only which asks them to arrest, because if you do not provide proper documentations, arrest is one of the options given in 70, and there is another 70, 78, 79, wherein the arrest warrant can happen. But then these sections, arrest warrant happens through the CRPC Act erstwhile, now the Bharatiya Nyaya Samiti Act. Alright, so if that comes, then police are supposed to be involved. If police are supposed to be involved, then to get the arrest warrant, magistrate is supposed to be involved. Right? So all these things has to be done before issuing the arrest warrant. And to go to the arrest magistrate and say that so and so person is going to escape or run away, then only the arrest warrant is given. Now, if the officer is not able to prove that the assessee is running away or not giving the documents properly as questioned, then it is not sufficient. In this event also, if you feel that the client, the assessee is not actually giving the documents, and especially in the case of fake invoice cases, many of the cases which have come across in Karnataka are related to fake invoices, correct? So in such cases, if you think that the client will be jailed, you can go for anticipated bail. So this is one such case law which I have put just to give a understanding that can we go for anticipatory bail or not. That is, the anticipated bail is given only because it is coming under CRPC Act as well. This is a old case law, 2020 case law. So that time CRPC was there. Now it is Bharatiya Nyaya Samiti, right? Next, many times we have come across one such case law from the Central GST Department. How many of you have attended the Central GST cases? I think majority of us have, right? And majority of the times they come with the case laws for multiple years, 3 years minimum, right? 3 years minimum. I have not come across even one case where they have come less than 3 years. Now, though, they are giving at least for last 5 years, nothing less than 5 years. Why 5 years? Any idea? Section 74. Now 74 is gone, 74A comes. So that is one of the reasons why we want more of such cases. Of course, section 128A is related to this, wherein separate case law has to be financial year has to have separate case show cause notice to be issued. Now, why, apart from 128A, why else it is required to issue a separate show cause notice? Any idea?
Time limit to pass the orders.
Right. So, majority of these cases, I've cited only the Karnataka case law over here for your reference. But majority of the cases across India are also given across many high courts have given a favorable order saying that separate years should have separate show cause notices. This will also be helpful for as you said, time limits for each case is different. For example, 2019-20, 74 is not exactly applicable in most of the cases. We all know that, right? I will give you one more case law which ahead, which will help you understand why. But 74 cases are not applicable in most of the times. Why? Because we don't have the fraud or they are basically 3A versus 3B or ITC wrong credit taken, which is legibly correct, but then they just say that, right? Considering all these things, it will be difficult to apply for a appeal or something like what we got this the amnesty scheme which happened last month. Right? In amnesty scheme also there was a circular given at the later part of the time, almost like 15-20 days were left for the for the amnesty scheme to get closed. At that point of time they have issued a circular clarification saying that even though it is given for multiple years, a single order, you can pay for only for the period pertaining to those where amnesty scheme is applicable. Remaining period you can pay the amount fully. But what happens in case where I want to go for a repetition? This was the issue where we had initially, if for 17, 18, 18, 19, 19, 20, I want to go for the amnesty scheme. But 21 and 21, 22, which was not there in amnesty scheme, we were not able to go for writ petition on any appeal without paying for the whole 5 years. So neither the amnesty scheme was helpful for us, nor the writ petition would have been beneficial for such clients. So these cases will help you out in understanding whether to get separate financial years. And yes, now there is a circular for issuing separate show cause notices for each financial year. So in central government, though they do the audit for 5 years or 4 years together, they are issuing a show cause notice separately for each financial year, for each matter mentioned in the audit report.
From when is it applicable?
They have got the circular last month, sir. So they are following it from this month onwards. That's an internal circular, by the way. So next a couple of cases I'm taking is regarding the e-way bills. Majority of us have been fed up with the e-way bill cases, right? How many of you are fed up with the e-way bill cases? And most of the times the cases are very petty issues. Correct?
Pin code number, road number.
Correct. Before I go to this case, how many of you try to apply section 125 for such cases, irregular cases? Ask a lower penalty, 1,000 rupees or 50,000 rupees at the max. 25 plus 25 or 500 plus 500. How many of you asked 500 plus 500? Anyone? Petty cases. And you said, sir,
25,000 is requested, but they don't agree.
sir, it is actually less than 25,000 also. But this 1,000 rupees only.
Very difficult to make.
Pin code wrong, all these things are called petty matters.
There are circulars, we say them, these are the clarification which they are issued, but on the ground
Absolutely.
it's very difficult to make them correct.
Correct. So especially when they are from the offices of other state. How many of you attended a case from other state? In one of my case, the assessee had not issued IRN number, that is the e-invoice number. Invoice was there, e-way bill was there, all documents were there. IRN number was not there, so 200% penalty. So in this case, I would like to specifically say what I did, because this is a personal case which I handled, and with the help of Jatin sir's help, I could interpret the law much more better. What he suggested me was to consider this way. Invoice was there, all documents were there, present. So he suggested me that I should consider this invoice as a DC. All the ingredients of a DC under Rule 55 are present in the invoice as well, right? So why don't we consider it as a Rule 55 delivery challan? That is a valid point which I felt, and I applied also. And luckily or unluckily, the Joint Commissioner Appeals, to whom I had present in the first hearing, accepted the fact that yes, you can accept, we can agree to the fact that it is a delivery challan without the IRN number. So hence, you have complied with all the documents required for the e-way bill. Correct? But for my bad luck, or for the assessee's bad luck, the officer was transferred before giving the order.
Tax invoice, prima facie the document would say tax invoice. When you are generating e-way bill, there also for delivery charges is separate option.
In this case, I offered the officer to pay that, yes, the document is wrong, without the IRN number. The client has accepted to pay 50,000 rupees as a penalty. The earlier Joint Commissioner Appeals accepted that yes, you can pay 50,000 and get out. But as I said, bad luck to the client and my bad luck, the officer changed. The next officer, when I went for the second hearing, he did not accept this way of interpretation. So he gave a order which was not befitting to our requirement. Nonetheless, I am waiting for the tribunal. I do not want the client to go for writ petition for such issues. So I am waiting for the tribunal to be formed so that we can apply for a writ. For the second writ authority. So now coming back to this case, Vishwakarma, non-carriage of e-way bill. So this person had not carried the e-way bill at all. So the High Court said that e-way bill interpretation is required to be, the compliance has to be mandatorily followed, but penalty and the questions of the confiscation or detention has to be very fair and proper justice has to be given to the assessee as well. So this is one-off case. Majority of the cases which I came across were against the assessee. They were all pro-revenue, which said that 200% penalty has to be levied. So this is one such case wherein I don't know what probably the judge on that particular day was in a better mood. He gave this particular assessee a favorable order. So I think we can, I know there are 100 cases against this, but then we can try to get one such case law, even if it's again even for your luck or our luck, that day also a judge who comes across.
The reason could be because he's a builder and they will not take ITC. That could be one of the reasons.
Absolutely, one of the reasons, yes. So we don't know, we never know, we just hope for the best. Right? Next e-way bill case is the bill to ship to model. This is one of the favorite topics for our officers. Who does not know majority of the cases, people sitting in the officer's other side, I have come across, especially in the e-way bill cases, do not understand what is bill to ship to. They do not understand how the whole mechanism works. And sometimes I have won such cases with the officer by explaining him. Majority of the times I have asked the client to pay penalty and let's go for the appeal. And thankfully, thanks to these officers, we get some extra work, right? Extra billings. So this is a case which was in Allahabad High Court, UP, and this department went against the Allahabad High Court and appealed with the Supreme Court. In Supreme Court also, it was upheld that the High Court judgment is correct and nothing else to be done. So it dismissed the case. And this is the issue, the point that bill to ship to case, the supplier, in bill to ship to case, normally there are three people, right? A, B and C. A being the supplier, main supplier, B being the middleman, C being the end consumer, for example. So if you go to the FAQs of e-way bill, in e-way bill also, they have explained it clearly as to how and who has to issue the e-way bill. It says any one of them can issue the e-way bill. But in our case, majority of the times the officers question why the second party has not issued the e-way bill.
Plus tax invoice.
Correct. So plus tax invoice has to be issued. Why the second party? There is a tax evasion. We have to show them that e-way bill and then sometimes they agree, as I said, sometimes they don't agree. So this case law, which is a Supreme Court case law, might be of some help if the inspector knows the importance of Supreme Court judgments. As I said, these judgments, they may not follow. It will be difficult for us to make them understand. Well, we have to try. We have to keep on trying till such time that they understand the nuances of the codes. Next one, another e-way bill case I've taken is about the expiry of the e-way bill. There are many times that the e-way bill gets expired before the goods are reaching to their final destination, and our officers are waiting for such cases. They keep seeing the system very regularly. Where is the vehicle? Where is the vehicle? And thanks to the GPS system across India now, right? They can find out where the vehicle is and how far is the vehicle from the destination. Correct? Thanks to the GPS tracker. And why GPS tracker? Because each vehicle has got its own details. They've got they will also be checking whether the particular vehicle has passed the particular toll gate or not. Right? So these are many ways for them to look at the vehicle being, reaching the destination or not. So whether 200% penalty is applicable, majority of times they do put 200%, but sometimes if the officer is also kind enough and he understands the law, he may put 25,000 plus 25,000, or we can even ask for 1,000 rupees. I will not say dwelling to understand, make you understand how to make him understand, more on that, but then yes, we can try to get it down to 25,000 plus 25,000. But it's all about our trying in such cases, clear bills. So, anyone else wants to try to get me anything apart from these three cases in clear bills? Any peculiar, anyone wants to share? Peculiar case law?
Is tax invoice required during the bill to ship to model? Tax invoice is required by the person on whom the bill is raised. Even his document should accompany transporter vehicle.
So in bill to ship to case, DC would do actually the delivery challan. It should do actually, technically speaking. But then one of the invoices to avoid any issues, if you want practical answer, to avoid any issues, let the middleman or one of the party give the invoice. No?
Even one of the party, let's say, bill from Delhi, shipped to Mysore, for example. The party is also located in Bangalore. The goods directly move from Delhi to Mysore. When the goods reaches Mysore, the checkpoint officer catch hold of the material and they say, since invoice from Bangalore party is not there, they don't release that. In that scenario,
This particular case helps you in that. That's the problem. So I'll tell you one more level, next level. Both A and C are in Bangalore. B is say in other state. Majority of these cases, we have such issues where B is in some other state, A is in Bangalore, C is in Bangalore, the first seller and the purchaser. Right? The middleman being outside, naturally we have to, place of supply comes into picture. A has to bill B as IGST. Right? I had got a case law wherein the officer said that, why have you put IGST, why are you not putting CCS? Correct? So this is one of the issues. And the other issue is that I had to tell him that the other party B will issue an IGST, so the tax will come back to Karnataka. No, you have to put CS. He will put the CS of that state. So such issues will come up, crop up, and it is difficult to make them understand, sir. As of today, when we just hope the commissioners of each state and the central will help them understand such cases. Nothing else we can do. We can only fight, and we can also be thankful to them for giving us more cases. Right? Now I have to think for like a lawyer when I get more cases. So we move on. Okay. So next one, it's regarding non-payment or reclassification of the section 74 notice to 73. So this particular case, it's a recent case law. July 1st was the order issued by Karnataka High Court. As I said, I have relied upon mostly Karnataka High Court judgments. This will be of some help for us to get 74 to 73. This case, the assessee was into being a contractor with PWD. As usual, most of the contractors with government agencies, they don't pay taxes on time. Why they don't pay taxes on time? Because the money from the government will only come after 7 months to almost 1 year. Though there is a MSME Act and 45 days, all these things are there. Even to that matter, the 180 days provision is there in our GST also. The law is applicable only for outside members, the assessees. The law is not applicable for government agencies. Right? So, but nonetheless, in this case, the officer could not pay the taxes because actually had not got the money. And the GST officers said that nothing doing, you have to pay the taxes. It is your headache to collect the money from the PWD department. So he went for a petition And there the High Court said that what he's done is correct, not correct, but then he's supposed to pay, but then this is not a fraudulent case. Don't put it under fraud case, put it under regular case. He's got genuine hardship not to pay the taxes. So don't consider everything as 74 case. Give the understanding whether there is an intent to evade the tax, intent to fraud the government, or is there any actual misrepresentation, willful misrepresentation for such cases. So this is the reason what I was trying to say in the previous case, that intent has to be there for the 74. So this case law can be used for to showcasing that intent is very important, whether it is section 74 or whether it is section 74A in current category. Right? So very helpful for us. There are many other case laws which were then as well service tax cases where the intent was very useful for us, service tax, customs and central excise. And I have used in many of these service tax cases the intent, because as habitual, the habit has come from the service tax era to issue under extended time limit and say everything is under fraud, even just for there is a wrong interpretation. So this will help you. Basavaraj Sajjan versus Additional Director of DGGI. The next one is a case law which is related to hostel premises. I believe this is under stay right now, but then nonetheless it can be helpful. In my opinion, I go with this case law naturally because hostel premises are to be considered as dwelling residential premises because though it is commercial, though BBMP or the local municipal authority gives us the challan as a commercial property, we cannot say that everything is considered as commercial property. So 2 weeks back I was given another seminar where similar issue was asked, and they also stated that hostel or PG facilities is more of a long-term staying option for working people. It is more like a house for them. Like though there are many people staying in one place, it is still a residential property where they sleep, where they bathe, and where they eat, make food also. Yes, majority of these hostels or PGs, they give food also as it is included in the rent they take, but that cannot be considered as a residential, is my personal view. But department is of other view that they are trying to gain GST from this also. We'll see how the case turns out to be. But then still, as of now, Karnataka High Court for Karnataka will prevail for us till any such further orders are received from Supreme Court or any other or any such notification comes in this effect. Right. Now coming to any other case laws which you would like to listen to, or any other matter which you would prefer me to take over here before going to advanced rulings. Can I move on to advanced rulings? Yes.
Anything about bogus invoicing for services where input credit for, I have just a simple case. A customer, that's okay. They loud enough.
Yes, I have a client who's got a case where he's got a job work done, and basically he's a works contractor. He's got a works contract subcontracted to one person. This department is disputing that to be a bogus invoice because that person is not there. But they are proving that that service has not taken place. Now, how do you have burden of proof for saying that the service has taken place where you have documentation, but they are saying that's a bogus invoice?
Right. So in this case, I can rely upon certain Supreme Court case laws and our as well service tax and central excise case laws where such matters were being presented. Right? I am not able to recollect the name of the case laws, but yes, in any such cases where the department says that it is bogus, right? Even if you see the paid cases which have been paid cases which have been handled in current terms in GST, I would say from the lawyer's point of view that or the case law, the intent has to be first given out by the revenue. Revenue is alleging something which has not been done, they are supposed to prove it in the first place, right? So this is a case which will go minimum to the High Court level. You cannot get any leeway in the first appellate authority. Tribunal is not formed yet. If it is formed, then you may get based on the old case laws, right? But as of today, you have to go for a writ petition, the solution as a solution, and you can get a leeway because you have the documentation as a as a consultant. You have kept the documentations to prove all the point that it's a job work, and the goods have been, especially in job work, the goods have actually been traveled, right? So you have e-way bill also in that case, correct? Right. So when e-way bill is also there, when invoices are there, when he has a premises where he does the actual job work, then it is easier for them to prove on that it is a job work. On the other hand, it will be the department who has to prove it otherwise, right? But definitely you get a demand order against that, knowing the officers, knowing the DGGI, right? I'll give you another case law which I have attended in recent times. The case is still pending under appeal in First Appellate Authority. This was related to an insurance agent. You said job worker. So now it is related to insurance agent. Right? This is also service category. Right? I don't know if anyone else has also attended this case. Well, I was lucky enough to get this case for one of my clients. So this case is that the insurance agents has got a secondary sister concern. Almost all the insurance agents have a secondary sister concern, where they do all the marketing activities. Right? As per IRDA Act, any insurance company who gets these premiums in the initial year, the first premium is there, they are not supposed to pay more than 35% of the premium as a commission. Right? But knowing the requirements of the insurance agents, knowing the amounts and the expenses spent by the insurance agents, they said that they will give you additional one. They also say that they give additional commission in the form of marketing expenses. Right? They give it in the form of marketing expenses to the secondary sister concern, not the main concern as a commission. They cannot give more than 35%. That's the rule. And they are not breaking that rule. So they've circumvented that rule and they've given the sister concern as marketing expenses. Yes, there will be market expenses to acquire new insurance premiums or new people to come under the insurance bracket. So this marketing expenses has been challenged by the DGGI Mumbai. Right? And majority of the insurance people, insurance companies as such have got the notice saying that the marketing expense is a bogus expense. So to answer this, how do we answer this point? In this case also, the client of mine was keeping all the records properly. He in fact also had the photographs of doing the marketing. Okay, he did not have the pamphlets, but then he did do the marketing, and all the insurance companies have got ties with various stores. You must be seeing in all the big stores, Reliance or Yafil, in the petrol bunks. Sometimes these insurance agents stand there with the kiosk. Right? These are the marketing expenses. And this additional marketing expenses they will get almost 30 to 40% as the insurance part of the insurance premium. Now I could prove that, but in this case also, because this case was coming from DGGI and they had actually summoned my client and people from the various agencies to come to Mumbai, and they have naturally the regular drill happens, threatening the assessee to put him in the jail, etc. Or if he does not give the document, and they only prepare the mazhar and ask them to sign in their name. So we, as usual, we have denied all those things, whatever said in that summons time, and we also said that the documents were supposed to be given, but then the officer did not accept the documents. So we are presenting at the show cause notice time again. So at anyways case, the case has gone against us, and these each insurance company has got order nothing less than 800 crores. 800 to 1000 crores. So the officer first who found out, he's got a medal right now because they're getting such a huge demand. Whether that demand is valid or not, no one checks. So I hope I have answered your point. Okay?
Do you have any case laws relating to post-sales discount from Karnataka? Post-sales discount.
Post-sales discounts. That is warranty sales. Warranty? Post-sales discount. I don't have the cases right now, and even I am looking for some leeway, because even in my client's case, post-sales discount has been given by the main company, and then the distributors followed it up. Yes, we are fighting that case because we have got from other state case laws. I think Mumbai or Gujarat has got a case law. Correct. So as long as we do not have a Karnataka High Court case law or Supreme Court case law, we cannot rely on that full-fledged. So before going to the advanced rulings, just a recap of who can file advanced rulings. And firstly, as you all know, in these 6 cases we can file the advanced rulings. And in case you have any case law pending against that issue, against the matter which you want to go for advanced ruling, the case law will be dismissed, because you cannot go against a case, advanced ruling against a matter pending in show cause notice stage, or a matter already taken up by the department. So be aware of that point, that you cannot go against the advanced ruling in such cases. Apart from that, yes, you can go under these 6 cases. I want, because of the time limit, I will not enter into each category. The form to be filed is form ARA1 plus 5,000 rupees fee, and tomorrow they will come back and say that you have to pay RCM on this 5,000 rupees fee. Be aware of that. As you all know, the AAR is binding only on the applicant and the officer, jurisdictional officer who is given the, who will be handling this client, assessee. And the advance ruling is also valid only till the time the issues related to that matter are matching. If any details change, the advance ruling even for that assessee was also changed. Coming to a couple of, I've got only 3 case laws. One is remuneration paid to director. How many of you think that remuneration paid to director as salary is taxable under RCM? No, right? So our Karnataka High Courts, advanced rulings, the same authorities have given 2 cases for us which are contradictory to each other. Right? So one says that Anil Kumar Raghavan case says that it is exempt, and the other one says that it is taxable. Right? So what do we believe? Right? There is a circular for us to follow upon, and in my opinion, we can go with the circular, and the circular is mostly binding. It is binding on the officers, and since it's a favorable circular, we can always say that the salary paid to directors is not taxable. It is a salary and not consultancy fees or any other fees. Right? Any other fees paid to the directors, yes, RCM will be applicable. It is better to tell the company to that if anything paid apart from salary, let us pay RCM and take the ITC. There is no cash. The only thing will be is the cash flow, which will be a smaller portion in terms of this directors' payments.
What if the opposite parties are in relation with this?
Still RCM is applicable, sir. In my opinion, because the 9.3 is specific, saying that even the director who is providing any kind of services, RCM will be applicable, especially in terms of additional directors.
What if a director is providing this professional assisting services and he is charging GST?
Sorry?
If it is not in the position of a director.
If it is not exactly. As long as it's a director and he's providing the services in the form of as a director, yes. For example, we charge accountants, if we are providing from the firm, then we can charge GST, right? And we are also as a director. for that company or as an additional director. In that event, any remuneration received in the form of director will only be under RC. Clear in that point? Last one, Volvo Eicher warranty services. Majority of the cases we have got this warranty services wherein post-sales warranty is given to the consumers, correct? So whether this whether GST is attracted to such warranty services, and the officers have said that the GST is the warranty services. There are two categories. If the GST is already claimed or is already taken at the time of giving the AMC contract such times, then GST is applicable at that time. Post services not required, which is free of cost. If you are charging for the services, then it will be chargeable. For the free, if there is any replacement of any product in the services, and if you are charging, again GST is applicable. If you are not charging, no GST is applicable. Right? Clear on that? Three different categories. If you are charging the customer for the warranty services, taxable. Not charging, not taxable. It's as simple as that. So, coming to, as we all know that over the period of last 45 minutes I've been saying a few things as to how we can apply ourselves to the clients. One thing is for sure, we have to keep monitoring, especially we all have known last 10 days a lot of hangama has happened in Karnataka state. How many of you don't know? How many of you don't know? UPI payment. So it's an emerging trend, right? UPI payment. Right? Thanks to Karnataka government enthusiasm, other states have come forward to say that even we want the UPI data. Correct? How many of you feel that you've got an opportunity over here?
So many notices have been issued.
14,000 odd notices, right, across the state. So how many of you have actually got such cases in your, for you to attend? Any of your clients who have not registered? Lucky you. Among so many of us, one of them have raised. Anyone else?
In this scenario, what will be the tax rate? Whether these people can still go for composition scheme?
So when the notice has been issued, once notice for the past year they did not go under compensation scheme, composite scheme. But then future, once they register, they can apply for composite scheme and then go, subject to the fact that they are under the threshold. Right? Majority of these people who got notices are not under threshold. Let us be clear. Correct. Right? I agree. Majority of them. But again, there are many people who have not been under 1.5 crores. Do you think such notices are valid? Sorry?
They should have done little more work and they should have issued their notice.
They have done their work.
Only based on UPI data.
Correct. So it's kind of awareness. What I think.
Just an example, if it is issued by an Nandini, so they could have taken the data from the KMF and done the analysis and then they could have issued.
You know our offices.
Or else majority of the notices will go as an invalid.
When they are sending notices with respect to e-way bill versus GST 1 and 3B data, 26 AS versus 1 and 3B data, do you think, is that valid question in your question?
If they would have done it, it would have been added more revenue to the government.
Correct. I agree. They have not applied their full set of mind and to understand what this UPI data is. I also accept that majority of the cases, UPI, whatever money received in UPI does not mean this supply of services. One. Second, the officers have forgotten that the fact that it is not income or receipts under GST, it is supply under GST.
Yes.
This is the basic differences which we have to make them understand. Right? You can always say to the customer, to the client who comes with such notices that first of all, do not worry. Whatever money received in UPI is not your income. First, tell them that. Okay. Second, you also tell them that majority of these people who got notices coming under 40 lakhs also. Many of them. I don't say majority, many of them come under the 14 lakhs because most of this are retail traders, right? So you can help them understand that, how you can reply them, right? The third point which I would like to make is that understand whether the notice itself is correct, valid or not. We go back to the first point, right? Whether the notice issued under 63, ASMT 14, is it a valid notice? Whether it has got all the ingredients mentioned in the form given by the department. Most of the times you would see that there is no form ASMT 14 at all. It will just say show cause notice. What show cause notice? Under which form? Under which section? It does not say. So it is better to contest on the basic validity of the notice sometimes. Right? So that is where you win half the case. I'll give you one example. In one of the case, the officer had not issued a proper show cause notice. The show cause notice said that it is referred to the audit para 1, audit para 2, audit para 3. Okay, there were totally 7 audit paras in the actual audit report, EDD2. Out of that, the show cause notice said refer audit para 1 and 2 for this, or refer audit para number 4. What in that audit para we never knew. It was not mentioned. So I questioned the validity of the show cause notice. Yesterday I had the hearing and the Commissioner of Appeals questioned me why didn't you reflect the show cause notice properly. I said the show cause notice itself is not proper. How can you expect me to answer it properly? He kept quiet.
Hopefully you have not got a notice wherein last week he got on notice wherein they say on depreciation pay 18%.
I know. I'll tell you one next level. Foreign company.
This is one cash flow statement they compare it. Current assets of last year minus this year is an income for you. So sometime I think I would have missed some chapter in CA final exam.
I'll give you another example for this. I don't know whether to say stupidity or anything further. Officers can make mistake, agree, at CTO level. Sometimes AC level also. DCCT also. In my case, DCCT also has done the audit. Leave DCCT. JCCT appeals have upheld the case. You know which case? Taxability, GST applicability on equity shares invested by the foreign company in India. It is considered as import of services. Yes, it is considered as import of services for putting the money in equity. Second foolishness, which it may seem foolishness for us, it may seem silly. If I say from their angle, they are trying to just gather as much as income for the government. Second issue I will say I have come across is the fact that my client had spent money in abroad. Expenses in abroad. For what? For food, for hotel and for travel in that place. Officer says it is import of services. GST levy. Value is small. But I still have to go for appeal against that.
Fundamentally wrong. So we have to
correct. So I cannot keep agreeing to
Can I
that.
ask one question?
Yes.
It's wrong, it looks. Let's say if some foreigner starts trip from Spain and he makes a round trip and go back to Spain, he spends a lot of money in India. In that case, GST is applicable, and why not in this case what we discussed? Because the voting point is India, and he goes around the world and comes back to India and spend a lot of money. Might the officer would have taken that stand?
Maybe. I can't think of the officer's point of view.
Because traveling starts from Spain, and even if this person comes to India and spend, and again goes back to Spain, that is exempt I think, because place of provision is Spain.
Place of supply.
Yeah. The same rule I think this officer might be applying.
But in such cases, travel, I can understand if you have taken services in India, right? So the services taken abroad, lodging services, place of supply is that place. Application of import tools also it would be enough for us to mention it. So it's already 8 o'clock and any questions, any other questions? This was it. Thank you. And I'd like to thank once again Manjunath Harur, the chairman of Bangalore branch, for giving me an opportunity. Thank you all.
Members, it's time for the Thanksgiving for the speaker. I call upon Chairman Manjunath to please present a memento as a token of appreciation and gratitude to our speaker. Let's have a round of applause. Thank you.
Thank you all.
Thank you one and all. So please look at the annual conference. Please register for it, 29th and 30th of August. Thank you all. Shubha Ratri.